everyone. Welcome from my side. My name is Romy Acosta. I am Head of Investor Relations of Jost Werke AG. And today I would like to give you a brief overview about our development in the second quarter of 2023. The second quarter of this year has been the strongest second quarter in the history of the company. Just managed to grow sales by 2.6% to 330 million euros, despite the fact that we had a fixed headwinds of almost 4 percentage points. Adjusted for that, sales growth would have been 6.4% compared to prior year. And if you look at the left side of this slide at the top, you'll see that the underlying markets develop differently. We saw a very strong growth and demand coming from the transport side of the business, with transport sales going up by 13% to 263 million euros compared to prior year. And this was actually driven by the strong demand for trucks worldwide, as well as for trailers in North America and in Asia Pacific, Africa. Trailer demand in Europe did contract slightly, but it's still on a very high level. On the other side, we saw sales decline in the agricultural business, especially for the compact sector in North America and for medium tractors in Europe. This was more than compensated for the very good development in transport. If you look to the top right of this slide, you'll see how this development in sales was across the regions, with Europe contracting slightly by 3% compared to prior year, and also North America contracting slightly by 0.6% compared to prior year. Here too, we had a fixed tailwinds adjusted for those would have seen growth in North America of almost 2%. The highlight from the region perspective was the Asia Pacific Africa market, which grew by 36% compared to prior year, and adjusted for a fixed, that growth would have been almost 50%. And this was driven not only by the continuous strong demand in India, the Pacific region, and South Africa, but also by slowly recovering of the Chinese market, which, if you may remember, was quite depressed last year. So we're seeing China slowly coming back. That has boosted sales in Asia, and overall the transport markets did very well in all regions, leading to the very strong performance in sales, despite the very good base that we had already last year. And when you look at the bottom side, you see the highlight for the quarter was that actually we managed to improve profitability in all regions. In Europe, adjusted EBIT grew by 2 million compared to prior year in absolute terms, with adjusted EBIT margin going up to 8.1%, coming from 6.5% in the prior year. And this is despite the fact that sales contracted. The same Scott for North America. Here too, adjusted EBIT outpaced sales, and we managed to increase the margin to 10.5%, the highest margin we've had in the region historically. And in Asia Pacific Africa too, adjusted EBIT grew in lines with the very strong sales increase, and the margin was at 20.1%, very strong, which led overall, when you look at the left side of the slide, you see that group-wise adjusted EBIT grew by 16%, more than outpacing the 3% growth of sales, and adjusted EBIT margin improved from 10% to 11.3% in this quarter, leading to a very strong performance for the group overall. So in summary, we saw very strong truck demand, the recovering of Chinese markets, a very good transport business also in America, which were the growth drivers for Q2. The operational flexibility that Jost had allowed us to improve profitability both in transport and in agriculture, despite the fact that the agricultural markets contracted in the quarter. And we had a very good development on free cash flow, with free cash flow more than doubling to 20 million euros, coming from 9 million euros in the prior quarter, which was due to the very good development in the working capital. Overall, market expectations for the remainder of the year continues to be very good and robust for the transport business. We do expect the decline in the agricultural business to continue, but it will be more than compensated by the strong demand in transport, so that we have confirmed our guidance for the year. and expect sales to grow in the low single-digit range, adjusted EBIT will continue to outpace sales for an improvement in adjusted EBIT margin, even though at the moment we do expect adjusted EBIT to continue to grow in the low single-digit range too. CapEx should remain 2.5% of sales, and working capital will be by the year end below the threshold of 19% of total sales. So overall, a very good performance in the quarter. We look forward to the second half of the year. If you want to know more about JOS and its development in details, I invite you to visit our webpage, or you can always contact me directly. Thank you very much for your attention.